Why Meta dropped 70%. Meta is the worst performing stock of the S&P 500 this year. So, what's going on? Hey everyone, Meta, formerly Facebook, has had a tough road this quarter, and the stock is down 70%. In this video, we will take a closer look at why Meta is down and the potential impact of the decline on the company. We will also discuss what could be in store for the future of Meta and what people should look out for. So, let's dive right in and see what's going on with Meta. It's unusual for huge companies with a market capitalization of more than $10 billion to lose more than 70% of their value in a single year. Meta Platforms has lost more than $700 billion in market capitalization in the last year, which is nearly unprecedented. It all began when Zuckerberg announced that the firm would rebrand as Meta. The public and media were eager to call out the barely disguised attempt to distance the company from a spat of negative news. From Cambridge Analytica to the Facebook papers, Zuckerberg's brand required a rebranding and a shift in public perception. When you consider that Facebook was actually losing daily active users for the first time, the name change made sense. What made less sense was Zuckerberg's simultaneous announcement of a venture into virtual reality. Since the rebranding, the public has been besieged with Metaverse adverts as Zuckerberg and his board try everything in their power to entice internet users back into the profit matrix. If you want to learn more about the financial markets, then click subscribe and bell icon, and let's do this together. Everyone was taken aback when Meta reported a 1% drop in operating income for the fourth quarter of 2021. Such bad performance was unusual for a corporation that had become accustomed to generating consistent results over the years. However, when Meta announced its results for the next 3 quarters, investors were truly shocked. In the first, second, and third quarters of 2022, group-wide operating income declined by 25%, 32%, and 46% respectively. Lower operational income was caused by declining revenue and rising expenses. The advertising segment, which was once the backbone of Meta's business, was heavily damaged by the tough economy, competition from companies like TikTok, and ad signal loss owing to a change in Apple's iOS policy. In terms of revenue, the advertising division posted progressively reduced earnings in 2022, from $11.5 billion in the first quarter to $9.3 billion in the third quarter. The silver lining was that the family of applications, Facebook, Facebook Messenger, WhatsApp, and Instagram, delivered increased engagement levels in the third quarter of 2022. Meta's high levels of engagement revealed that the company's poor financial success was more likely due to decreased industry-wide advertising efforts, hampered by a sluggish economy, the war in Ukraine, and other factors, rather than a failure to retain and delight consumers. Reels, Meta's short-form video service, for example, produced 140 billion plays every day, a 50% increase from 6 months previously. Currently, Meta is attempting to improve its advertising business through Reels, artificial intelligence, and better monetization. Investors will need at least a couple more quarters to determine whether the current drop in earnings is a blip or a lasting slump. Facebook changed its name to Meta around a year ago to reflect its shift towards the Metaverse. JP Morgan estimated $1 trillion in income for this business, so Meta's massive wager seemed to make sense. Meta spends substantially on its hardware, virtual reality or VR and augmented reality or AR, and builds an ecosystem of users, developers, and partners to achieve a foothold. Meta's seriousness is shown in its financial figures. Reality Labs' losses increased 37% in the first 9 months of 2022 to $9.3 billion, accounting for almost 29% of advertising income. But here's the catch. While losses increased, Reality Labs' revenue remained nearly flat throughout the same time period. The poor top-line performance revealed Meta's VR headgear struggled to expand beyond its early users, raising the question of whether allocating nearly a third of Meta's operating revenues to Metaverse projects was prudent. While the transition into VR was perhaps perplexing, Given Meta's continuous popularity on social networking platforms such as Instagram and WhatsApp, the plot still made sense. Meta is seeking to usurp a complete industry, not simply the social dominance that Facebook enjoyed in the 2000s and 2010s. And in keeping with Facebook's previous nefarious practices, Meta is still aiming to keep the general people under constant surveillance for the sake of capitalist consumerism. What's even worse, Meta was sued for copyright infringement earlier this year by another company called Meta X LLC. It appears unlikely that Zuckerberg and his lawyers were unaware of this little business that had been operating under the name for the previous 12 years. Therefore, the combination of Meta, the company, and Metaverse, the concept, is almost certainly intentional. Zuckerberg is capitalizing on the general public's ignorance of the metaverse and broader virtual reality to advance his brand. The good news is that by all reports, Zuckerberg's metaverse platform, Horizon Worlds, is doing horribly. Many people have left the platform because of difficulties ranging from poor rendering to sexual harassment. Nobody knows how Meta spent $15 billion on the platform. Horizon World has so few monthly active users, less than 200,000 as of October, that it does not even rank among the top metaverse platforms. Horizon Worlds continues to have a perception problem, not only because it is practically synonymous with Zuckerberg's face to those who are aware of it, but also because the vast majority of people are simply unaware of what it is. The fundamental attraction of Facebook is the connection people have with their friends and family. Many people utilize it to keep in touch with their friends and family. Because of this, it has remained one of the most prominent social media sites to this day. However, given the numerous blunders Facebook has made over the years that led to the makeover, many people have an unfavorable opinion of the site, regardless of its corporate name. In addition, the normal social media cycle of young people looking for the next big thing is present. This can be seen with the downfall of MySpace, for example. To prevent this steady slide into irrelevance, Facebook set a goal of buying up or pummeling every firm that threatened it. WhatsApp and Instagram were acquired. Snapchat resisted and was attacked with Instagram Stories, a knockoff product. Facebook even purchased an Israeli surveillance software called Onavo in order to watch the social media market and identify developing new apps, which it would either duplicate, buy, or kill. But Facebook's success with TikTok ran gone, and social media appeared to be drifting away from it. Another acquisition, Oculus in 2014, was the first step into the metaverse, as well as a novel twist on the classic approach of acquiring an entire industry. Oculus, formerly known as Quest, is a virtual reality hardware company that has sold over 10 million units at a price point of $300. Meta began purchasing the remaining space as well. In a Federal Trade Commission case, the FTC stated that Facebook already owned the leading device, Quest, the top app store, Quest Store, 7 of the industry's most successful developers, and one of its best-selling apps, Beat Saber. That suit is still ongoing. Despite this endeavor to consume the industry and deliberately use the metaverse to replace the internet, Meta's creation is simply unappealing. People that purchase Quest hardware do not use the Horizon Worlds platform. Instead, they are logging onto popular sites like VRChat and Rec Room. Rec Room boasts 5 million monthly active users on its own. One issue is that Horizon Worlds has failed to distinguish itself from the virtual reality scene. The metaverse's highly configurable avatars and powerful experience creation capabilities are part of its definition. Moreover, Zuckerberg purposefully designed his avatar to look exactly like him, an extremely uncommon usage of a metaverse platform. The opportunity to explore any identity and any place is a big part of what makes the metaverse and virtual reality so appealing. Another concern is the effort to be another workspace, as shown in the Horizon Workrooms spin-off. Zuckerberg has invested billions of dollars and his entire faith in the success of his metaverse platform. He's betting on the same strategy of crushing competitors and monopolizing the VR space. It is tough to see how well that will play out for him and the company. So in conclusion, Meta's stock price has been on a downward spiral for the last year due to a combination of rebranding, a struggling advertising division, and the mismanagement of funds in the metaverse. The company has had to contend with a sluggish economy and a change in Apple's iOS policy, which has affected its advertising revenue. Meta has also faced challenges with its virtual reality platform Horizon Worlds, which has been unable to attract users or distinguish itself from the competition. The future of Meta is still uncertain. It remains to be seen if the company can turn things around and regain the public's trust. Investors should keep an eye out for any changes in the company's advertising strategies, as well as any updates on the Metaverse platform. With time, we will learn if Meta can still make a comeback. What are your thoughts on Meta? Is virtual reality really the future? Tell me in the comments section below. Also, if you're new to this channel, I strongly encourage you to subscribe and click the like button. You can also keep up with all of my most recent videos. See you in the next one.